So welcome back. Today we're doing another podcast, and we do have a special guest, one of my good friends, and he's a mortgage broker. So we're going to talk about all the interest rates going up, and we're going to introduce Mr. Chetanya Monga.
Hello everyone, how you guys doing? Thanks Kabir for having me on the podcast.
Our pleasure, man.
Yeah, so like Kabir said, I'm a mortgage broker. I've been in the industry for about 4 years now. We've recently started a new mortgage brokerage called Brightcap Financial, and we provide financing for construction, commercial, residential, private, and
The
alternate
list
financing.
goes on and on. So anything you need, basically.
Anything you need for
We're going to
financing.
drop his number. All you do is call him, and that's all. So starting with the podcast, tell them a little bit about yourself, and then how, like you started, why'd you start doing mortgages and whatnot.
Absolutely.
And then tell them how you like the industry. Obviously you're in the industry, so you do like what you do.
Yeah,
right? So,
absolutely. Yeah. So I got into the industry about 4 years ago, coming out of SFU. That's where we actually had the pleasure of meeting.
We almost did the same degree.
We almost did the same degree.
But,
I graduated with economics, and it's been a pleasure since joining the industry. I got into the industry particularly because of my background in economics, being able to understand market trends, inflations, interest rates, etc., and of course being able to help people. That's
the beauty of it.
Yeah, since like each other, we're very social individuals, like you could say.
Exactly.
So we tend to connect a lot with people, and
similar minds help quite a bit. Right?
Exactly, yeah. So that's the reason why I've been in the industry. Ultimately, we're here to help people get the financing that they need and really just lead them in the right direction instead of the wrong direction.
Right.
There's a lot of that in the industry.
A lot.
We're here to guide people.
Me and Chetanya also, we do a lot of our personal business, other business together too. So when it comes in terms of you give the file and you don't have to worry about it because you're in the right hands. So he paid me $50 for it, so I'm gonna promote his business here. But
I'll send him the e-transfer later, of course.
I'll put the proof on there. But so today, Chetanya, we obviously yesterday, and we've been listening to this. Rate have been increased, market have collapsed. I don't think market has collapsed. I think me and Raj talked about this on the last podcast.
Right.
I think market is correcting now.
Yeah.
Right. So tell us in numbers, to make a little bit more sense for people, how much of a payment, because that's the biggest concern in my opinion.
Right.
Even when interest rates goes up, first thing comes in your head, okay, it went up, but how much is the payment that's going to go up, right?
Absolutely, yeah. So with the 50 bips increase that we just saw yesterday,
right.
Essentially what happened is once the Bank of Canada increases the overnight interest rate, typically the top Canadian banks increase the Canadian prime rate.
Right.
That went up by about 50 basis points. So pretty much now variable rates are provided based on a prime minus a discount rate. Those discounts have stayed very similar for the last few months now. So essentially rates have gone up by 0.5%. For every $100,000, you could say that's an increase of about $30 per month.
Okay.
So essentially see that increase depending on the
Right.
size of your mortgage. That's how much it should impact you for your monthly budget.
So for example, right now, let's talk about maybe 6 months from now.
Right.
I think you approved one of my clients that were sitting at 1.7% variable.
Right.
Now, let's say 1.7% variable for 500,000. I'm just going to give you a rough number.
Yeah.
Let's say the payment is about $2,100.
Okay.
So you're saying every 100,000 will go up by so and so.
That's right.
So now, what's the variable rate now? Currently at banks and
Yeah, so right now rates are being offered at about prime minus 0.5%, I would say.
Right.
So right now prime is at 3.7%.
Okay.
The best variable rates out there for uninsured mortgages, we're talking about mortgages more than 20% down.
Right.
We're sitting at about a 3.2% interest rate approximately.
So you can still get a rate that you were getting before COVID, because we're going back to that.
We're going back to that essentially,
Right.
yeah. Typically we saw fixed interest rates a lot higher before.
Right.
We did see fixed interest rates just I would say last year, or can we say
Right.
2 years ago? COVID has
Right.
kind of lost you've lost track of time.
Definitely has.
But rates were at 3.79%, 3.84%. Those are very common fixed rates.
Right.
Now we are seeing higher fixed rates.
Correct.
And that's typically because of the bond yield rates, the inflation that's in the market.
Right.
And, it was Bank of Canada's only way to really reduce
Correct.
that and correct the market, right?
That was the only tool they had. And they
that's the only tool they have,
Right.
unfortunately, right? And of course, that impacts the housing market
Huge.
quite significantly.
Right. Us being like me and Raj, like we were discussing it yesterday.
Yeah.
Like, going from lineups at open houses to like, you want to come to my open house? I open house 2 to 4, right? So
Yeah.
Why don't we translate this into a dollar amount?
Okay.
For example, let's just say if somebody is borrowing $500,000
Right.
with the interest rate that has increased now,
Mm-hmm.
dollar-wise, how much more are they paying from what they were paying before?
So for a $500,000 amount, if we're talking about this latest increase,
Yeah.
Each $100,000 increases by about $30.
Okay.
So 30 times 5 would be $150 you
Got
could
it.
expect as an increase
Got
for
it.
your monthly mortgage payment.
Now let's talk about that for a second. $150 every 500K has gone up in payment because of the interest rate hike.
That's correct.
Now the prices have gone down about 10-20%.
Right.
Somewhere in between there for some
Absolutely,
properties.
yeah.
So that offsets the $150. So technically you're still paying the same amount.
That's absolutely
From your
true.
pocket,
Yeah,
right?
yeah,
Yeah.
We've seen in the market that there's a lot more discounts that are being provided.
Yeah.
Sellers are negotiating more with buyers,
Right.
and that has opened up a lot of things, right? If you were paying, for example, $500,000 for a
Right.
condo unit,
Yeah.
you might be paying $450 now,
Right.
So that has definitely decreased the mortgage amount that you have to borrow, and as a result, you are still paying almost the same amount as you would have
Right.
paid.
That's just too much to absorb. So if you guys have any questions, just call him.
You know
have
who
his
to call.
number, Give him a call.
So yeah, so basically, as Mr. Special Guest, I don't know if you're the special guest or Raj is the special guest. So I'm kind of confused myself right now.
Me too.
I'm the host for sure, right? So here is like, as you said, like the prices have gone down by so much. I think I was giving Raj an example a couple days ago. Listed a townhouse
Right.
for 1.3. Neighbor sold the townhouse a week before we listed for 1.38.
Right.
Now the townhouse is not even, the lowest offer we have received is significantly lower. I can't say the number because it's on the market.
Yeah.
But there is a huge decrease. So that does offset the interest rates. I think when people get to see the overall picture,
Right.
it helps them out with, okay, you know what? The prices have gone down, interest rates have gone up. My payment's not substantially higher than what I thought.
Right.
Right? So that's what our motive is to kind of like tell people.
Yeah.
But as an investor, I know you invest a lot too, because I know. And as an investor, do you think this is a good time to buy right now?
I think it's absolutely the best time to buy right now.
Right.
We've seen a price correction,
Right.
and that's the most important thing for
Right.
an investor. I would highly recommend anyone to
Right.
keep an eye out on the market
Right.
in the next few months, starting now.
Right,
Right.
because of
Start
such a
looking
huge-
for opportunities.
Right.
Right. There's tons of opportunities out there.
Right.
Some sellers think about it like
Already
this.
bought something.
Sellers have
Right.
bought something
Right.
at a market peak.
Right.
Right. And they have higher mortgage amounts now.
Unfortunately, they have to get rid of their properties
Absolutely.
because they don't have any in the way.
They don't have any other
Right.
way, right? So there's only so much they can do to really
Right.
offset their costs.
Right. And the rental is huge still. Like
Yeah.
rental market has also gone substantially higher than what it was before COVID.
Think about it like this: as
Right.
property prices increase,
Right.
naturally the rental market has to increase.
Definitely. Yeah. It goes hand in hand.
What really happens is your mortgage payment goes up.
Right.
So for these landlords, now they have to charge a higher rental income
Right.
in order to be able to support their monthly mortgage
Correct.
payments.
So as an investor, if you're looking for a good deal, 604-355-7001. And if you want to finance this,
604-537-4897. You know the call.
There you go. So you have our contact. So we'll end the podcast here. Again, thank you so much for coming and
No
joining
problem.
in.
Thank you for having me.
You are definitely the guest speaker. We'll,
Okay.
let Raj let go this time. But again, guys, if you guys have any questions, I have done majority of our business with Tanya, and he has done deals that we didn't think they were possible. So give him a call. We'll put his information here too, and he will take care of your financials and everything else.
Yeah, any sort of financing you guys need, whether it's, like I said, commercial, construction, residential, alternate, private, we got it all. We can work with it all. We have a team of experts that's ready to help.
So those were two promotions. So he's gonna give me $100, and here we go. Let's end the podcast here. Thank you so much.